If you're a high-income W-2 or business owner, you have probably had this thought. If I make more, I'm going to jump right into a higher tax bracket and get killed. I hear that all the time. Today, we're going to take that fear and replace it with a picture you cannot unsee. Because your tax bill does not work like a guillotine. It works like a stacked wedding cake that Uncle Sam is quietly eating from the back. He takes as much as he can without getting kicked out of the reception, just enough that it still looks perfect from the front. And once you see it that way, the 2026 tax brackets suddenly make a lot more sense, and then they get a lot less scary. Let us forget about taxes for a minute. Picture a big Saturday wedding. The ceremony is over. The speeches are done and everyone has cried, and then they roll out the cake. This cake is not just dessert, it's a project. If you have ever talked to a baker, you know that the conversations goes like this. How many guests? How many tiers? How big should each tier be? You realize pretty quickly that the cake is not one giant block. It is stacked layers. There is a tiny little top tier, mostly for show, and then bigger and bigger tiers underneath that actually feed people. For a small wedding, maybe you have 2 or 3 tiers. For a big wedding, you might have 5, 6, 7 tiers. Same basic design, different height, different total cake. Now keep that exact stacked cake in your head and let us gently swap the labels. Instead of thinking cake for guests, pretend this is your income for the year. Every year, you build one stacked cake. The first bit of income you earn, that is the top tier of your cake. As you earn more, you're not just piling money randomly. You're effectively stacking new tiers. More income means more tiers, adding to your income cake. Some years, your cake is short. Lower income, time off, a transition year. Some years your cake is tall, big W-2, bonuses, business profits, equity events. A new grad might have a little 2-tier cake. A high-earning professional or business owner might have 5, 6, or 7-tier cake. Same structure, different height. Okay, now we're finally ready to talk about tax brackets. Tax brackets are nothing more than labels the IRS sticks on each tier of that stacked cake. The IRS says that top tier of your cake, that is the 10% tier. The next tier down, that is 12% tier, then 22%, 24%, 32%, 35%, and 37% as you go down. So your cake has tiers, and each tier has a label. The number of tiers you actually have depends on how much you earn that year. If your income never gets far down enough to build a 35% tier, that layer literally does not exist on your cake. There's nothing for anyone to tax at that rate. So now the picture is this. One stacked cake per tax year, built from the top down as you earn. Each tier has a little percentage as a label. So far, nobody has touched the cake. And here is where everyone usually starts to panic. They hear, I'm going to be in the 30% bracket. And they picture someone taking that 32% bite out of that entire cake, like a giant axe or a guillotine coming down on everything. And that's not how it works. Think back to the actual wedding. When the stacked cake is out on display and the couple is taking pictures, that cake looks perfect from the front. But that caterer is doing all the real work at the back of the cake. They're quietly cutting plates from the back of each tier. As long as they do not cut too deep, the front still looks beautiful. The structure holds, and the photos look great. The front is for show, the back is where the sizes come from. Now, let us introduce our friend, Uncle Sam. In this analogy, Uncle Sam did not RSVP. He did not bring a gift. He just quietly walks around to the back of your stacked wedding cake and starts taking slices out of the tiers you built that year. And he does not just hack it randomly. He uses the labels as his instructions. On the 10% tier, he is allowed to take a 10% slice out of the back. On the 12% tier, he goes one layer lower and takes 12% out of the back. Then the 22% out of that tier, 24% out of the next, 32%, 35%, 37% as he gets down to those deeper layers. That is all marginal tax brackets really are. There are rules for how deep Uncle Sam is allowed to cut into each tier of your income cake. He's always trying to take as much as he can from each tier without getting kicked out of the reception. From the front, your stacked cake still looks like your income. From the back, if you turn it around, you can see that the slices are missing. That is your withholding. That is your estimated payment. That is your tax bill. He never cuts so much that a cake falls apart. It is structurally sound and, for most people, mostly unnoticed. So when someone tells you, do not take that bonus, you will just lose it to taxes, They're talking about a guillotine system we do not actually have. You're building a taller cake. He gets a slice of the new tier at a higher rate, but you still keep the rest. He does not get to go back and recut the earlier tier. So if you're moving from the 24% tier into the 32% tier, all the income in the earlier tiers keeps is 10%, 12%, 22%, 24% slices. On the dollars that spilled into that new 32% tier gets 32% treatment. You're just cutting into the newer layer, not the whole stack. Now, the metaphor is solid. Let us talk about 2026. Right now, the brackets have specific cutoff points, certain amounts of income that separate one tier from the next. In 2026, the structure stays the same. 10%, 12%, 22%, 24%, 32%, 35%, and 37%. But the lines that separate the tiers, points where you move from one layer to the next, shifts because of inflation and schedule rule changes. For some of you, that means that the exact income numbers where you spill into the next tier changes. More of your cake might end up in a deeper layer than before, even if your income is similar. So if you are a high-income W2 or your business throws off multiple 6 years, 2026 is the year where we do not change how many tiers exist, but the portion of your stacked cake that lands in each tier may change. And that changes how much Uncle Sam is allowed to carve up the back. I'm not going to read every bracket cuts up number to you on this video because the IRS updates them and I do not want this to age badly. Instead, think of this as an example. The big idea is not memorizing the exact dollar amount. The big idea is understanding this question: which tier does my cake actually reach and how much of my cake is in those deeper tiers where the slices are bigger? Let me give you a few concrete cakes so this really clicks. Example 1. High-income W2 around $500,000 mark. You're a specialist W2 and maybe some bonus, maybe some RSUs. Your stack cake is tall. You're filing through the 10, 12, 22, 24, 32, and into a 35% tier. In 2026, more of your cake might sit in that 35% layer than before. Uncle Sam does not invent a new layer for you. He just gets to carve a bit more from the back of that bottom tier you're already touching. Example 2. Business owner earning around $180,000 to $220,000. You have got a good year in the business. Your cake is filling through the 24% tier, maybe brushing the edge of a 32%. You're nowhere near the 37% tier. That layer does not exist on your cake at all. So the planning question becomes, how much of your cake do we want to fall into the 32%? Or do we want to keep most of it in 24% layer if we can? Example 3. Dual income couples in the low to mid $300,000 in income. You're both working or one works and the business does well. Your combined stacked cake is big enough so that you are touching into the higher tiers. In 2026, you might end up with a little more of your cake in that deeper tier unless you intentionally shape what shows up in 2025 and 2026. The point is, I do not need your exact numbers on YouTube to show you the concept. What matters is this: you do have a stacked cake. It does have tier, and Uncle Sam is cutting from the back of every tier you reach. So where does this leave you practically? Once you see your year as a stacked wedding cake, tax planning becomes a question of cake design. Which tiers are we okay filling? Which tiers do we want to avoid filling into if we can? Do we want to intentionally fill a deeper tier this year? For example, with Roth conversion, because in the future you might be in an even higher tier later. And 2025 is a critical design year because it is the last year before those 2026 brackets fully kicked in. This is where we look at income you can shift or smooth over several years. Deductions that might be better in 2025 versus 2026. Things like Roth conversions or capital gains timing based on which tiers your cake is likely to hit. Not to avoid tax completely, that is not real, but to decide very intentionally, how much of my cake do I want in these deeper, higher slide layers. So if you remember nothing else from this video, remember this: your income is not one giant block that gets whacked by a single tax rate. It's a stacked wedding cake. You build it from a top down as you earn. Each tier has its own percentage label. Uncle Sam walked around the back and quietly takes what he is allowed from each tier as much as he can without getting kicked out of the reception. Never so much that the whole thing collapses, but enough that a lot of the cake disappears where you do not see it. 2026 does not change the fact that you have a cake. It changes where that cake sits in the tiers and how much of it lands in those deeper, lower slice layers. If you want someone to sit down with you, lay out your cake, and map out what 2026 should look like for your situation, that is exactly what we do at Havenstone for high-income W2 earners and business owners. If you're serious about keeping more of your cake, we would love to help you design it before Uncle Sam quietly eats more of it from the back. I'm Mia, and I'll see you in the next one.